How do you calculate to determine what price range stocks you play? Good question. You always calculate based on your maximum loss, right? So check this out. This is a great question. So let's say, for instance, that I should turn these lights on here, guys. So let's say, for instance, that your maximum loss per trade, like you set this for yourself, you promise yourself, this is part of your rules, right? You say, I will not lose more than $300 on any given trade. $300, right? That's your maximum loss. You're going to give every trade, no more. If they get to 290, 95, I'm out. I just won't even touch 300, right? It's a good rule for some. So you've got to now take this you have what I call a $300 box, a risk box, a risk unit of $300. You take this risk unit and you go to a price range that does not move $300 in a loss very easily. You don't play what can knock out $300 in the blink of an eye. That's gambling. That's casino playing. So you take your 300. Now you go to a price range with whatever your average share size is. So let's say you play 100 shares. So now if you play 100 shares with a $300 risk unit, the stock has to move $3 against you to knock you out of your box, your risk unit box. Now, if you play a Twitter, it's not very common for Twitter to move $3 in a short period of time. You see? So now you've got a $300 risk unit box. You've got to be wrong by an amount that's very difficult for this stock to achieve. A $3 move is not common for that stock. But here's the error. Most people take their $300 risk unit box, to continue with this example, and they go play Apple, who will bat you silly $300 every few seconds. And so because they get lucky sometimes, they like it. Doesn't matter if they get bat and beat up and punched all the time by Apple. It's just that occasional, I got it. They think they got it right. Like if you were to give a personality to a broken clock, wouldn't it say yes 2 times a day? Just for a moment though. And then every other moment except those 2, the broken clock is freaking wrong. But the clock would remember the 2 times. Remember that time I was correct twice a day, but every other time wrong. And this is the delusion that losing traders live in. They have selective memory, and they don't know basic concepts like risk units and price ranges and volatility ranges. You want to play a stock with a volatility range that's not bigger than your risk unit. And if you get that backwards, I don't care how skillful you are, you're going to be a losing trader. You can be the best skilled trader and play the wrong stocks and still be a loser. So selecting is hugely important. It's a very important part of the equation. You know, it's sort of like you can be athletic, but there's still probably some sports that you're probably going to be bad at. So you got to take your athleticism to what matches you. Same thing in trading. Guy who can run really faster than most people on the planet, but he's 5'2", can't go in the NBA. Athletic, fast, agile, but not going to make it in the NBA, not going to make it in basketball. You follow what I'm saying? So there's a combination of things you have to get right. You've got to you got to select properly the family of things that you trade, the price range that you trade. You got to do things like start off conservatively and increase your aggression gradually throughout the week. You don't start the week off gradually. All right. You've got to have all of your decisions that you make in the market already made. Like most traders are making decisions in the trade on the fly, which that is just so novice. There's no hope for a trader like that unless they get some type of training or unless they change or discover it themselves. You can't make decisions in the middle of a trade. Those decisions have to already be made by you. That's what a plan is. It's pre-made trading decisions. When A happens, I've got action A for scenario A. Oh, here's scenario C. I've already got scenario C, action C for scenario C. So when B happens, I do this. When A happens, I do this. When D happens, I do this. And you have to have every possible thing that happens an action corresponding to that thing. And so now trading is not deciding. Trading is matching. Here's F, action F. Oh, wait a minute. Now the stock is giving me scenario A. Here's action A. Here comes D, action D. This is how you trade with power, confidence, no thinking, no guessing, no analyzing, no wondering, no hesitating. There's nothing to hesitate about it. You already decided it. Does this make sense? That's trading with a plan. That's trading with a method. That's a strategy. Not like I think I should be doing this right now. Let me try this. That's not trading. That's stupidity. Nothing decided, no rules, just guessing in the moment. Like, how can success come from that in anything? I'm a heart surgeon and I'm doing this heart surgery. I don't know. Let me just try this and see if this works. Really? Seriously? Nothing in life you can get success like that.